monetary magic. We're still living with the effects. That's how you put it in your outlook. So what do you do now if you want to still allocate to fixed income?
Yeah, good morning from Frankfurt, and thanks for having me. I think what's important in this decade probably is really to look at fixed income to, as you said, take a fresh view. We'll probably stay with that quite low yield environment and probably negative one in Europe for quite some time. So what we are saying is you need to justify any holdings of, let's say, negative fixed income yield. But I think some of this is important still in the portfolio as a diversifier. So what you need to do in this decade is probably to look at the right strategic asset allocation, justify this negative yield environment. But I think what we see today with tensions in the Middle East up, I think that justifies some diversification. So you need to balance your risk still. And I think this year already shows in 2 trading days it can be very positive like yesterday, but there's also risks out there. And probably 2020 is a bit different year from 2019.
Yeah. Christian, what would you say to investors who would say, well, actually, I just want to allocate to cash instead?
Well, if you allocate to cash in a negative environment, it's probably not the best idea, to be very honest. And if you deduct inflation, it's even worse. I think what you really need to do is to probably look at the themes you are investing in. You can take probably a bit more risk because from a macro perspective, we do expect slower growth, but no recession. I think that's very important. And if you pick the right themes and you probably invest with a buffer, I think that's the best way to deal with that environment.
So within fixed income then, Christian, what would be your preferred areas of diversification? Is it still treasuries? Are you looking more at the corporate space? Are you looking elsewhere?
So we take a bit more a barbell approach. I would say treasuries still have the allure, to be very honest, because we don't forecast a massive change in the currency spectrum. We probably have seen the peak in the dollar strength, but we don't expect the dollar to massively weaken. So for a European investor, it could still make sense to look into the US, and we see still some flows there because it's still the highest yielding top 10 currency, I would say, if you look at the US dollar. And with no real moves on the fixed income side, on the interest rate side, we probably say that's interesting on the one hand. On the other hand of the barbell side, we still think looking at emerging market bonds, at emerging market fixed income, and here especially in the Asia region, if you look at corporates there, I think that's also quite interesting. So it's more a barbell approach we take there, and there's still some return to be made from that perspective.